All right, good afternoon, everybody. I'm just doing this video to give you guys also a quick breakdown on how to find high probability trades after exiting out of absorption zones. Okay, by absorption zones, I'm talking about when you see days where price got absorbed going up, or price got absorbed going down, and then now it's into a box, right? From both the levels, from the high to the low, or from the low to the high, whichever way that it panned out that day. Okay. Typically, I would say to look for days where they already broke and closed outside of for a possible continuation. Just be mindful that sometimes they can get absorbed going out of that range as well. Okay, so in this case scenario right here, that's exactly what happened. You got to close out, and then the following day it pushed down a little bit, but that was most likely, in all honesty, if we go through and look at it on the smaller time frame, we're probably going to see that it was probably just a quick, honestly, wick down, and then it just instantly pushed back up. All right, so I'll just show you guys this, right? And as soon as the market opened up, exactly what I said, price opened up, wick down, pushed off, right, to continue back to the upside. Also failed to continue lower than the London session low, right? Wicked off, pushed back up with strong acceptance to the upside. What you'll also notice is that the CBD was net positive. It initially started net negative before the day started, but it started off net positive acceptance and continued to slowly melt up to the upside. It didn't really have a lot of expansion on this day. But primarily, what you want to look for are more days like this one right here. Okay, so we did have our absorption areas. We did have our breakthrough here. You could have possibly taken this trade for a short move to the upside here on Wednesday the 7th, right, which it did get absorbed going up top, and it also did push down. But primarily you want to see days where they actually close outside of the absorption area, right? So we had absorption down here, absorption up here. We had our breakout. Absorption got created here on Wednesday the 7th. Closed down here, opened down here. We had the same thing where price got absorbed on Thursday, closed above our absorption area. We had a gap up, which we had our slight little retracement, and then our push. Okay, so preferably find these where they have closed outside of an absorption area and look for continuation. If you don't have continuation, then you're going to find failure. Okay, so if you find failure, which is usually relatively quickly, it's usually pretty much a lot, sometimes more than none, you're going to find them at open. Then you just come back and that you see that you found that as soon as the market opened up, you'll find the failure. And same thing like the one I showed you from the other day, right? Opened up, failed, flipped net positive, and continued on up, right? If we wind back to that exact moment, we will see that on a bar, we had bullish CVD. We also had bullish delta, very strong push to the upside. And then we had our follow through continuation for the rest of this trade for the remainder of the day, okay? So that was our Home Depot play that we had called out the other day. We want to exit out of this right now and continue to move forward with our trades. In fact, which I will also do is show you what happened here, right? Also, we can go to our weekly and we see that we did also have failure as price continued to keep failing down towards the zone. It wicked. That was our entry. And you see that it ran, I want to say that was our entry from Thursday, and it ran and continued to push up from that level. So that's why I said you can check the weekly as well and see if it's struggling to proceed lower after it's hitting these absorption levels, right? And then pushing back up. And really, honestly, you could have rolled this from that day, what was that, Wednesday, all the way back up to roughly the end of the week. Well, Thursday, sorry about that, Thursday, roughly to the end of the week, right? Playing off of those absorption levels once price starts to move away from those, okay? Or, wait until they get out of these absorption areas to catch it for a move, right? We did have our opportunity on the daily, but even if you did caught it on the weekly because you missed it and you seen on the, at the end, towards the end of the week that, hey, it was also moving out of this absorption area. That would have been still a late trade, but I mean, that still would have been $8 move off of Home Depot. And that would have honestly put you in that trade on here on Friday. But we have here, once we've seen our gap, wick down, push up for Home Depot. Moving forward, let's go to gap. That was another trade that we called out this week. Same thing here with gap. You will see that we had our absorption down here and we had our absorption up here. Once it broke out of this level strongly, it pretty much continued up. We did have a pullback. If you are a day trader and you were just looking for an intraday trade, this would have been your entry right here. Once you've seen that it broke that absorption level, could have just been looking for it to exit out of these levels that were created. And we go to our replay and we see on our replay that we had here, as soon as the 9:30 open happened, we see that we had, sorry about that noise, that's somebody in the other room. I'm in the library right now. So we had our 9:30 open, and once it broke above that absorption level, then we pushed from 25.91 up to 27.08. And then we started getting our absorption levels repeatedly, and it just kind of started bouncing back and forth in between these absorption levels, price getting absorbed. So it was just kind of a fight, or, sometimes you may refer to it as a squeeze. Okay. Exiting out of here, then we can also go back and look and see that after this move right here, we had another move. Once price pushed down, right, and it would have opened up here, that would have also been a bullish kicking pattern, okay, because price closed in a downward move, and when price opened up initially the following day after that, it was already above the close and the open, right? That means aggressive buyers are coming in and entering the market to push it away, and that would have been still a nice day trade as well, from roughly about 27.60 to a high of 28.85. Okay. Moving forward, just giving you guys a few more examples. We're going to go over here to crowd, and same thing right here. Like I said, these are repeatable patterns, repeatable setups. Preferably you would like to see it close outside of it, but sometimes you can just mark off these levels if you see that, like I said, there was a gap up from this failed 2 down where it was absorption here to here on a daily. So what we'll do is we'll just mark out our absorption high, because we already seen that the price had its gap up, right? And we already see that we had a gap up on the day. It didn't really have too much of a wick, so I'm also going to drop a line all the way through. We're going to go into replay, and just so we can see this candle here. Okay, so our white line is our open, and our gold line would have been our entry point once it made it out of that absorption level. And as you guys see, right, we have that at our 9:30 open, right? So once it would have broken this level and we would have known that it was outside this absorption level, and that candle did have a lot of force in, I want to just hit the replay just so that way you guys can see. On crowd, we had our bullish CVD 943, and then we also had our delta at 9,598. So as soon as it broke this high that you would already have marked out to know it was outside of the absorption zone, moving with force, right? Even though we did have a little wick out here, right? We already had our entry down here, which we would have been up roughly about $3 already on this move. And we could have seen how the rest of it played out, and our fair value gap held up, pushed back down, and we continue to move upward. So our entry from 466.44, and price is up at 485 and still kind of continuing up. We can stop this. In fact, hold on. No, let's do it like this. We're gonna just increase the time just a little bit and then hit pause. So even if you would have stayed in this trade, which I mean, it would have gave you signs to get out as it's getting absorbed and then kind of pushing back down towards this fair value gap. And if you've seen it push back up and then start to continue back down, it broke this low, you might want to start thinking about exiting out of your position or scaling out of the trade. If you didn't already take profit, which you should have been taking profit back here in this area. But even if you waited until it got all the way back down here at 478, you still would have been up over $12 on this trade. Okay. If we go to the weekly time frame on this same trade, right, we will also find some area at some point in time where we had an explosive move outside of an absorption area, right? Without me even looking at it, what do we find right here? We have our absorption up, absorption up, absorption up, absorption down, failed to absorption, push up. Once it got closer towards this level right here, we could have marked as we would have seen price. Like I say, you're gonna have to go and check these periodically at opens and stuff like that, so that way you can kind of see where price is hovering. Jot them down, leave a in your notebook, journal, or whatever. Kind of jot this stuff down. But you would have seen right here, if you would have been checking, like, okay, well, he had a fail 2 down. I know I want to wait till we get up out of here. So then on Monday, you could have checked on Monday, seen that, okay, it ain't make it up out of here. Tuesday, hold on, sorry. Nope, sorry about that. This is the weekly time frame. My apologies. So from this week of the 8th to the week of the 15th, you could have been looking and trying to see when exactly was this going to occur. And once it did and it opened up here this week, you could have been looking to make your entry. And then once it broke the absorption area high, let me see, that's the week of the 15th. So let's go back to September. All right, what do we notice here? All right, we have our gap up. All right, so price pretty much stayed below for that week, right, the 15th, right? And then when the market opened, right, we had our gap up, right? So now the price has gapped up. We already got our day to just go ahead and make our entry. Small little wick, took straight off, all right? From, what is this, around about 469 to 502. Great trade, right? So that's what I'm saying. You can use these weekly and daily time frames to be able to find these trades. I'm going to move on to Costco. And like I said, we will find these everywhere, right? We can go back as far as October, right? Got our absorption up, got our absorption down, failed 2. You'll find a lot of these with failed 2s or 3 bars. So once it closed above here on October 14th, what do we see? We was already above our absorption area. And it wasn't really a gap or anything, but we had our support right here from this fair value gap. By the time the market would have opened up. And when we drop down to our lower time frame, we would have seen, right? See here, as soon as the market opened up 9:30, took straight off, right? Very small wick, and the market flew from 946.20 all the way to 960 in 15 minutes, right? I say great trade. You will find these all over the place, right? It's just about taking the time to look at the end of the day, finding these absorption areas. We were back here. This was this current, sorry about that. Let me get up out of here. My apologies, guys. Same thing right here. We got up out of this little absorption area where it's compressed here. Did have a little bit move down. We could have made some money on the move down. Closed above here. Really no gap, but still just a small wick down. Pushed up, right? Here got absorbed on this day, pulled back down, opened up, same thing right again, made it from between an absorption zone and opened up and continued to push, right? Then we had a continuation the following day. So it's basically just going back testing, finding these same things, absorption down, absorption up, absorption down, failed 2, gap up, and then the push. You would have seen this here in the pre-market that it was already above the absorption area level. So it's just about spotting these trades, identifying them, going through the patterns, and then seeing the patterns to be able to find these moves. They're everywhere. Okay, we're going to go ahead and I believe we already did Home Depot. I'm going to go over to GS. I believe we did. I did show you guys Home Depot already. Goldman Sachs. Here we had our absorption up, absorption down. We had our breakout here, right? Got absorbed here, pushed back into the zone. So now that we are honestly back into a zone, what do we want to see? It close out. We did have a small little gap back to the upside. Well, not really a gap, but it opened up a little higher than what it closed, pushed down. That would have been a great move still to have been able to catch down from 891.49 on the day to 881.4. Then we had our reversal, our 2-2 reversal, push back up. That could have been a good move. You could have took a strat play as well, back to the upside. If you missed this day right here because you were looking for the absorption areas, right? Once we close outside of this absorption area up here again, we have a small little wick to the downside, took right off all the way from 914.33 to 948.99. Right, and it went a little bit higher than that before, and honestly got wicked out. Right, same thing over and over again, repeatable setups. You guys just got to take the time to look through the data and get familiar with spotting these trades, because like I said, they are repeatable setups. These are part of the market mechanics that you will find over and over again through your journey. All right. Here we have zones that were created here, right? Absorption, 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 failed to close above, kind of pushed a little bit above, but we were inside a bearish fair value gap. Absorption up, absorption down. Once it finally broke these levels and then broke this level here for these two absorption levels, and it closed outside of them, right? Then we can look where we found support at last time, right? Would have been a great move to the downside. We had our gap here after it closed outside of these absorption levels, right? Closed down here on Wednesday the 31st. And then we had our gap down and a straight push down, a flush. That would have been an excellent trade right there from around about 660 and closed out at 629, right? The whole bottom fell out into on that day, right? Fell two down, absorption. You could have took this on a push up strat play, right? Or if you would have seen the support that it gathered, because it most definitely 100% did gather some type of support that most likely was based off of absorption on the 15-minute time frame, right? So we can go here and we just mark out that level, only because that's where it opened up at. But when we drop down, right, we will find that somewhere either price wicked or it got absorbed, and it wasn't exactly absorption, but it failed to hold below the London session low. Wicked, right? We got acceptance, push back up. Once it broke back over the high of the previous candle, you could have made your entry there at 635.53. Even if you would have got out somewhere up here, right? 643. That was an $8 move, right? If you seen the wick, if you stayed in, held, whatever the case may be, that was still a nice move, right? If you would wait till it push back up, whatever the case may be, whatever your necessary risk management is or your trading plan for these cases and scenarios, just make sure that you do have, a good entry, right? And then also have an exit strategy in case the trade starts to go against you. But these are very highly likely setups to follow through with a good probability. Right, we'll move on to UNH, and this will probably be the same last example that I give you guys, because it's basically the same thing that you're just looking for over and over again, just repeatable patterns, repeatable setups. All right, you can find stuff that was inside of here as well, but I'm just going to elaborate right now on these last ones that were here, right? We had our absorption up, absorption down. So a lot of times you'll find them with back-to-back days, right? absorption up, absorption down, same thing, absorption up, absorption down, right? Here we had our breakout on this day, Friday, December 26th. So as you've seen, we had absorption, and then once it pushed there or it broke post the previous day's candle high, that could have been an entry, could have caught a nice move that day. It created absorption up, absorption up, absorption up. You could have waited until you found a day where it closed above the absorption levels, right? That's your best bet to find a close. Open up a little bit lower and push back up, and that could have been your entry back to the upside here. So let's just mark out the low here, and then also let's just mark out our absorption level right there. And once we found, hold on, sorry about that. Let me go back and make sure that I got this right. Okay, that's where the problem is right there. Okay. Get rid of the previous day. The following day. So, all right. What do we have here? You see that price opened up. It went up, right? Got absorbed, came back down, and created a new New York session low. Once we got our new New York session low, we got absorption down here. Tried to push back down again. We got absorption again. So as you've seen, the price was getting absorbed. If you got in this trade initially off the bell and it pushed up, and then you seen that it was kind of starting to come back down or whatever, you may close out the position if you got scared out of your position. If not, then you would have kind of just held on, went through a little bit of drawdown, seen that they gained support right here, same around the London session low, right? Failed to close below that. Got absorbed again, took back off as it was pushing back up, right? And then broke this high again. You could have added on to a position if you would have been in any type of drawdown, right? To make your position stronger, as it would have followed this trend all the way back up to the upside from down here at 336. And maybe you could have got out somewhere up here when you start seeing the price get absorbed. If you would have got nervous, possibly at 343, and then that was still a $7 move, right? And just think if you would have added on to the position after it broke through this level again, it broke through this absorption zone, or even if you would have waited because you've seen it up here, you're like, okay, well, I want to make sure it's clear of all absorption zones, right? You still would have added in at roughly about 339. And 339 added to that position you should have been in all the way up to 343. That was another $4 move, or you could have rolled it more higher up to the upside. I think that you guys kind of should get this from these few examples I get, because they're all the same. It doesn't matter if it's on a weekly time frame or a daily time frame. These are the same examples that you have seen in other videos that I have done, as far as on the 15-minute time frame as well, waiting for it to get out of those absorption zones on a micro scale. These are just things I'm giving you to identify on the daily and the weekly on a macro scale, right? And it's no different because the market is an auction, and that's how it runs, right? It's either in balance or out of balance, right? In balance is caught between zones. And once it gets out of balance, right, you're in the price discovery mode, where price is looking for new highs, new lows, wherever that, may be, right? But on the monthly scale, we see here, same thing, right? Absorb this month, absorb this month, absorb this month. Try to break, absorb this month. Finally closed outside of it, wick down, pushed up, and it just took off, right? And this is all the way back from December of 2021, right? So this stuff has been going on like this forever, okay? It's not going to change, right? You just have to find those points where they are breaking out of those zones, right? We have zones here, zones here. We just need to find a breakout of the zone. And once we find a breakout of the zone, most likely it's traveling to another zone, right, that it has previously seen before, or new discovery to new all-time highs, or retracements to the lows. So I hope you guys enjoyed this video and this breakdown. This is how you find your trades on a daily time frame and a weekly time frame for most likely intraday trades. Any questions, don't hesitate to DM me, and just go over anything. But like I said, I think through all the examples that you guys should pretty much have this. Thank you and have a great day.